What about the job market story? Well, it is not in any way a vibrant job market at the moment. The job market is kind of hanging on. So if you take the most recent official figures, we are seeing net growth in employment, but a lot of that growth in employment in net terms is in part-time work. And the official forecast from the Office of Budget Responsibility expects unemployment to head up a little bit further, but not that much. I mean, I still believe this is we've seen a minor miracle happening in the job market in the sense that the disconnect between the fall in GDP and the fall in employment that we had in the recession is still more or less with us. So, I use this figure a lot, but GDP fell by more than 7%, employment fell by only 2.5%. In the early 90s, it was more or less the other way around, that GDP fell by 2.5%, employment fell by 6.5%. So, and that may explain why the growth in employment now is more subdued than you might expect in a recovery, because people didn't get rid of people to the same extent. There may have been an extent to which labour was hoarded, so there haven't had to be as many hirings in the upturn. But the picture that the Office of Budget Responsibility expects, which will be that private sector employment offsets the fall, more than offsets the fall in public sector employment, is one I entirely endorse. Again, if we look back over the period of the last recovery, long recovery from the early 1990s to the recession that started in 2008, 4 million extra jobs created in the UK, and in net terms, all of them were in the private sector. So the public sector went down, then went up again, but we had 4 million net new jobs. And the same thing, I think, is expected to happen this time, that, we'll see more than 700,000 public sector jobs cut, but, we'll see that more than offset by this 1.7 million rise in private sector employment. And, people may say, well, is that really going to happen? And the answer to it is, it is already happening. So, if you take the past 2 years, we've seen something like 680,000 new private sector jobs in net terms, against something like 390,000 public sector job cuts. So again, it's a story that's not often told, but it is the case that the private sector is offsetting public sector job cuts. And you may ask why, in that case, unemployment has gone up. Well, of course, it's because the workforce is also growing. Migration is also there as a factor. Localised pay. This is quite interesting. It looks at these are Treasury figures for the public sector pay premium. I think we'd sort of got used to the idea that if you work in the public sector, you get more job security, you get a better pension, but you don't get paid as much. For some time, that has not been the case, and in some cases, there is quite a substantial public sector pay premium. And I don't know what people here think, and maybe it's not relevant to you, but I don't detect an enormous amount of enthusiasm for localised pay in the public sector. I may be wrong. Maybe employers are reluctant to sort of seize on it because it's controversial. But the Treasury certainly thinks this could be a momentous change in the way that the public sector is organised, in the way that it interacts with the private sector. Not so much in London and the South East, but in other parts of the country where, employers do often find they can't compete with the private employers often find they can't compete with the public sector. But that's an interesting one. Again, I don't know whether people have any views on that. The picture, I say, there couldn't have been a giveaway yesterday because getting the borrowing down, this just shows it's very easy to get public sector borrowing up. You hit recession, you hit a financial crisis, it goes up very quickly and very alarmingly, and bringing it down is much more difficult. And I think this is proving to be quite difficult. So we've still got a kind of rolling total of around about 120 billion. That comes down gradually, 100 billion rolling total over the next couple of years. But getting it down to very low levels is a really big challenge, and I think that that challenge is still there. So there couldn't have been a net giveaway, and I think one of the reasons it's so difficult, and people at the back may not be able to see this, but I think we tend to think of, and certainly, people in business, I think quite rightly think, well, a recession's only really over once you get back to where you were before, and then you're starting to grow again. Now, as far as the economy is concerned, we're still 4% below where we were before the crisis, and some of what we lost during the crisis, we just never get back. So the calculations suggest that the economy contracted by 7%, 4 or 5% of that has been permanently lost, and also the rate at which the economy can grow in the coming years is somewhat slower than we thought it was before the crisis. So, compared with, if you drew a straight line on the basis of the trend before the crisis, and you look at the gap, well, there's an 8% gap now compared with where we might have hoped to be, and there'll be an 11% gap by 2016. And of course, if you've got a smaller economy, you've got a smaller tax base, and getting the borrowing down is more difficult. And I think this is the real challenge. I still maintain that what the government is trying to do on the deficit is really the only option. I mean, you can talk about the pace of reduction. There wasn't much serious discussion about a temporary fiscal stimulus in this budget, and I think that is right because, given what the ratings agencies are saying, I mean, I take that somewhat with a pinch of salt, but given what the rating agencies are saying, even a temporary fiscal stimulus at this stage would have looked as though the government had lost its nerve and had given up on deficit reduction. And given the scale of the gap, the black line is public spending as a percentage of GDP. The green line is tax revenues. And as you can see there, even raising taxes, even squeezing people quite hard, as we've seen with VAT and other taxes, doesn't get you to a much bigger share of tax revenues to GDP. Or most of the action, 80% of the action has to be on the spending side, and quite a lot of that still has to happen. So beyond, the most important statement the government has made was not yesterday's budget, was not the autumn statement, was the comprehensive spending review a year before that, in the autumn of 2010. The debt does come down, and it comes down a little bit more quickly than was thought. The difference between the two lines there, between November and now, is mainly this transfer of post office assets to the government. So it's really a little bit of a statistical artifact, but. They've set themselves a target of getting the debt falling by the end of the Parliament. I think they may just about do it, but it is touch and go for that. So what about, let me sum up the budget. As I say, the numbers on the deficit, on borrowing and on debt show that there was no fiscal room for manoeuvre. There couldn't be a giveaway. There is no giveaway. It's a fiscally neutral over a few year period. I think the changes were quite bold on the 50p rate. It would have been easy not to do anything on that, and relatively bold on corporation tax as well. And the personal allowance was a big increase in the personal allowance was if you like, the coalition price that had to be paid for that. And I think the overall message, despite this morning's headlines, was is a positive one, particularly when viewed from outside the UK, and I think I would suggest viewed from from most boardrooms. I think the question is, as I said earlier, whether he gets into the kind of tangle over the age-related allowance, the granny tax that he did over child benefits. I mean, the pensioners do vote. I mean, their participation is, and it would make a big difference if rather than switching en masse to to Labour, Conservative and Liberal Democrat pensioners simply chose not to vote. I mean, that politically would make a big difference. And of course, pensioners feel hard done by as a result of very low interest rates, the impact of quantitative easing on annuity rates, and all those things. So that was it is quite a substantial political gamble, that, and it may go wrong. And summing up on the economy. I think the good news yesterday was we got used to chancellors, this chancellor and his predecessors, standing up and saying, well, things aren't turning out as well as I hoped, and I've got to revise down my growth forecast, revise up my borrowing forecast. That did not happen yesterday. We saw a small upward revision of growth, not to be, nothing significant, but at least the picture didn't change, and I think that was quite welcome. So and as I mentioned earlier, we've got those eurozone and oil price dangers, but there's a slight sense in which they are somewhat less worrying than they were. In the case of the eurozone, it's what the European Central Bank has done. In the case of oil, you've got talk of, when David Cameron went to America last week, he and Obama talked about releasing oil from the strategic reserve to try and bring the price down. The Saudi Arabians have been talking about increasing production. So maybe there's a recognition of the damage that is doing. I say the low inflation story is essential if we're going to see consumer spending grow. And I think there is a reasonable chance that, maybe not straight away. I've always believed that the economy will be quite flat until the middle of the year. But, second half of the year, we see this start to look like a more normal recovery. Normal, not runaway, but normal in the sense of 2.5% growth. Business investment starting to pick up. Consumer spending starting to look a little bit stronger. And the world economy, I think, is in a far better place than appeared likely a few months ago. And a lot of that is down to the better news we're getting from America. So reasonably optimistic. I think it is time to sort of talk about a light at the end of the tunnel rather than a sea of troubles. But you will have your own views on that, and happy to take any questions and observations. Thank you very much indeed.